Well, hello and welcome everybody. It's Joe with you here for the 17th through the 21st. This is the trading room for the week ahead. Let's jump into it. I've got my 2 cents. Take responsibility for the outcome. I think you guys by now, you should know the drill by now. I'm going to break down the meaningful news of the day if anything happened. I'm also going to break down these markets technically and share trades, as always, with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
First off, folks, let's talk about last week's events, and there was quite a few overall. The big one being a little bit of lightning in some of these inflationary indicators. The S&P, the Nasdaq at new highs, all-time highs. They were consolidating there for a while, and the end of the week bumped above that. The Dow itself remains flat. A lot of utilities, energy and industrials kind of struggling. We're seeing a lot of bifurcation in a lot of sectors. We'll get there in a second. It's still hanging around its 50-day moving average, but it's not nearly as strong as the other two. Signs of cooling inflation. Let's jump into that in a second here, but the sector performance is selective. Extremes in energy versus tech as an example. You're either really getting hurt or you're not, or you're doing really, really well. There's far and few in between. Lots of plus twos, minus twos, things like that. So we'll take a look at those. But first off, let's just jump back straight into this economic report. I think what the markets were most excited about is we had the CPI come out the same time that we had an FOMC statement, right? They say it's very rare, but it does happen. So it comes out and it is extremely dovish. It looks like inflation is looking nice and tame here. Good drop in the month over month off the core and the CPI itself. The Fed comes out and says they like what they see. They keep the rates the same at 5.50. Not really talking about increasing the amount of rate cuts, but hey, folks, for a minute there, we were worried about even getting one. Looks like we'll probably get one here as early as July, but at least one for this year and then possibly a few more the beginning of 2025. So that did get these markets excited, and you'll see here in a minute we get the chart that kind of popped things north of previous highs. What also followed it was this core PPI number. This came out also light. Unemployment claims ticked up, which shows slowing, right? It's kind of a good thing when it comes to pressure on inflation. And one that I thought was interesting, it's not like a huge one that's followed a lot, but import prices month over month actually decreased. So all signs pointing to, hey, this 5.5% rate that we've been stuck at is starting to kind of have an impact and slow things down, although it's been touch and go for a while. So the Fed's got to be pretty comfortable, but the markets absolutely took this with excitement. So let's jump into our market analysis and see how we finished for the week. Overall, like I said, it was very selective. Take a look at the Dow versus the SPY. Dow's down 0.5%. The S&P put in 1.5%. The Q's just shy or 3.5%. Russell slid a little bit. Oil and gold both had a pretty good bounce this week, as we had seen energy beat down quite a bit. So that move in oil was kind of to be expected. Taking a look at the charts, though, this is what I was talking about this last few days, and this was 100% the CPI in that tame inflation. Not a lot of volume that really followed it, but we were already in a good situation, already at a +3 market, lots of reasons to buy, and this just gave us one extra reason. We'll see how long it goes, because it is feeling like a top. These markets usually feel that way once they get into this area. I always like to talk to my traders about, hey, once the markets get up above a certain point, they kind of look around and say, okay, now what do we do? So we need constant stimulus to kind of justify stabilizing here and maybe gaining some traction and moving higher. So I'm not surprised on how this week ended, but it is very strong to say the least. Let's take a look at the Qs. As you can see, the exact same story, but this is where it starts to get a little different. Because as the SPY kind of poked its head up and stayed in this area, the Qs, I should say communications, technology, all the stuff that's been leading, decided just to move higher. In fact, there really wasn't even a consolidation at this area. If you take a look at the difference between the SPY and the cues themselves. It was more of just a pullback and then a subsequent move. A lot different. So that's kind of where the tale of two cities lies here, is whatever is leading has continued to lead, and whatever is lagging has continued to lag, and everything else is just kind of in between. Now, if you take a look at how we finished on the week when it comes to this heat map, it is very apparent on what's leading and what's lagging. It is absolutely this top left corner: software application, telecommunications, semiconductors, technology. All of this is doing really, really good. And by their weight, the sizes, they can absolutely draw these markets into some false sense of, boy, everything's doing well. That's not the case. I've got a lot of bearish trades that I've been seeing as of late in this financial area, industrials, energy, just getting smoked in some of these areas. So let's just jump into this week's events. Bullish as we set new highs in a few areas. Momentum looks to be slowing outside of the must-haves. I was going to say the FOMO stocks, but these are the must-haves. Anything in the news, anything AI, anything that's been already up 60%, 100%, anything that you can think of that your neighbor or dentist has talked to you about, those are the things that are still leading these markets, and they're unapologetic for it. And what I mean by that is, for my bears that love to evaluate and break things down that says this is overpriced, I totally get it. But guess what? If you're going to get run over if we try to stop this. So let's just stay out of the way. More inflationary numbers coming up. We got retail sales, Philly Fed, flash PMI for the services and manufacturing. All of these are gauged and watched by the Fed. And I think if we see a consumer that is slowing, it's really going to help. I think the rate cuts. I really think it's going to help the idea that these markets might gather and push. Another thing that's often overlooked is a holiday. Now, Juneteenth, it's a newer one, right? But the markets will be closed, and it's a midday closure. So we'll have Monday, Tuesday, no market Wednesday, and then an opening Thursday, Friday. This is probably a great time for somebody to take the whole week off. Or let's go Monday, Tuesday, and not come back for Thursday, Friday. Or take Monday, Tuesday, and Wednesday off and come back for Thursday, Friday. It is going to be, I believe, overall a lighter volume, and it might have one or two really big impact days and then just dead for the rest. So this would be a great time for you guys to step back, take a look at your opportunity. And what I'm going to do, focus a lot more on the sectors and the sector's activity as of late. Not much to report here. I mean, like I say, we've got this day completely off. So this Wednesday does have G7 meetings, things like that, but we're not going to be around to watch it. We do have the retail sales number. I think that's something we can look at, and then it's just going to be dead until we get down to the service PMI number as well. I did talk about the unemployment claims. All of these, which I discussed, are kind of secondary. They do have they are followed, hence we have a little red folder next to them. However, based on the CPI, PPI, or even the PCE number, they're not going to have the direct impact that we've seen on the markets. So it's going to be pretty interesting to see how these things go, especially into a holiday week. Now, that being said, the more things change, the more they stay the same. Haven't changed our outlook at all. 20 moving average, 50-day moving average, 20-50 slope is all bull, bull, bull. It's a +3 for the monthly outlook. I'll draw it again, folks, right here. This little hiccup that's moving sideways is what's got me still pegged to this +1, because it does feel like it's just out of momentum. Not bullishness, it's just out of momentum. So +2, +3 for the week, a little aggressive, although there is slots open for us to get that way. But going into the holiday weekend, into a midweek holiday week, I just think that it's probably best just to play it a little tighter to the chest there. And even, dare I say, maybe not throw any darts. So moving into the sector analysis, you're going to see exactly why this last week's action was a little bit misleading. Let's just go straight to it. Technology, 5.31%. Everything else struggled. Real estate have a little bounce, and the communication services also, which is the second strongest sector out there, at 0.67. So this week was not very strong. One thing that I thought was super interesting was a rollover in financials. Financials was about a +1 or a 0. And it just completely rolled over. Lots of opportunities in there. One that I've been watching for the last week or so is some of these larger companies are starting to show some weakness. And looking to kind of correct. So let's just break it down as everything pretty much stayed the same. I did change a couple, and I'll let you know where they are. But first off, let's start with our utilities. Utility still has that descending triangle pattern going on. No real changes from last week. You could say it just continued to slip across this area that we've been watching for quite a while. Here's our last 5 days. Let's box them in right through here. You could see, a little bit of a bounce. Looks like it was going to gap up, came down, and more of a stagnant or sideways. But individually, there's some stocks out there that did much worse and could have some opportunities. But I'm just going to go ahead and just keep this as a 0. Let's jump straight into communication services. Gain of what? 0.67% this week. Not too bad. You can see it's just kind of bouncing itself on its rising moving average. So I could give this a +3. I'll just kind of keep it where we left it. And I think it's great. Even though it is like a little bit of a pullback over those few days, it's still technically a +3 as it's above those averages and they're sloping correctly. Let's move over to our real estate. Real estate has been a 0, and I'm going to keep it kind of at a 0. I do like the consolidation. If it's something that you want to play sideways, targeted butterflies are actually really good on this. Slightly above, slightly lower, or condors. No real change. It gapped up. You could see the last day it gapped up, came down, and then the last 2 days have been inside. Above its averages, the averages are flipped correctly and sideways. So you could argue that this thing could actually be a +1, but I'm just going to keep it as a 0 because it didn't really gain anything that really got me too excited about it. Let's jump into healthcare here. Healthcare is one that I was looking to short, and I'll be honest with you, 2 weeks ago I was looking to short this sector completely, and it just did not. This move that it's had off that bottom is very strong. Now it's hit it as resistance and it's pulling back. So has it strengthened? Yeah, we got price action above a flattened 20 with the 20 and the 50 with this slope here. I can easily keep calling it a +2. I know it's reluctant for me, folks. I watched this thing go from a -1 to a 0 to a +2 in a couple of weeks. But that's kind of what's been going on out there, unless you've been super weak like energy and in industrials and materials, or you've been super strong like consumer and technology. So it is kind of a fun ride. In fact, we did see it in financials. So I'll get there in a second, but here's healthcare, +2. Let's move on. Industrials staying weak. I decided to make this a little weaker, and here's why. And it's not too bad because we do have this nice descending area. We did get the cross. So the 20 is now below the 50, where it should be for a bear. Both are sloping. Lower price action is below it. So I had to update this thing from a -2 to a -3. However, there is still a little bit of strength in this guy at that floor. So let's be patient and make sure that it is indeed going to break that. But all sorts of really good trades out there for a negative trade, maybe a -2, but or a -3, and that's what we'll keep it. So I upgraded this to a -3 because of the crossover in the moving averages. Here's the financial sector, and this one was a doozy. And here's why. A couple of things flipped all at once. Maybe I missed this from last week. I apologize if I wasn't paying too much attention to our charts. So we got the slope. That's the first thing here. However, these are not correct. So I like the slope and the price action. Remember, folks, we ended somewhere back at here. The price action broke below that moving average, increased slope below both. So now it's below both and we have a sloping 20. So it was pretty easy for me just to kind of move this to a -2. And that's where I'm at with it. Now it's in a similar situation before I put that number up than we saw in our previous chart, right? We got to wait for this to start to slide lower. There's also another place here and here. So although this is a kind of a -1, -2, I do like this move. I would like to see it below, maybe this place before I'd be a full confident -2. But I went ahead and put it there anyways because that's kind of where this is headed. So -2 there on XLF. Let's jump into the consumer discretionary and the defensive discretionary. This one poked its head up a little bit. It did finish a little weaker. This was down 0.51% for the week. Now that might because it was consumer defensive, that the number we have. This is the discretionary, which showed a little bit more strength. Now what's different between the two, folks? I scanned them side by side, and you're going to find, well, like I found, and I'll say it again, some of the retail stuff is outperforming some of the more defensive things. I believe this was at a +2, and I really wanted to downgrade it to a +1, but I'm going to leave it at a +2. And it's because of the slope. I wanted to see that line slope up a little bit more, but we'll see if it gets there. So that moves us over to the super strong, and it's tech. Tech has done nothing but take off based on where it was from last week. We talked about this nice high base going on, and guess what? 1, 2, 3, 4, 5 days. It just went straight up. So we're expected for a high base breakout, and it exactly did that. High base breakout technology is still going to stay at a +3. Materials, on the other hand, this one I actually increased the downgrade because of some obvious reasons. Nice sloping averages. I just wish they were crisscross. I'd probably go a -3 on this, but since the 20 is still above that 50, I can't. But I love the price action. I love how it popped its head up here, failed at this area. Now it's back down to these levels, and it could just drift lower. So very easy for me just to kind of bump that up to a -2. Moving into energy, it stays the same. It's continuing weakness. It was flat last week. We had a -3. It had a little bit of a gap up, and it rolled over this week, and it looks almost the opposite of tech, which is why I started which is why I mentioned it the first part of the slides, is the divergence between some of these sectors is getting almost parallel to each other. So I'm going to keep this at a -3. So this is basically how we finished last week, and is the weak got weaker and the strong got stronger, and that's it. Biggest slide was financials from a +1 to a -2. Industrials got weaker to a -3, materials to a -2, and consumer bumped up to a +2. So take a look. We're abandoning that out in that middle. I mean, -1, 0, and +1 is very difficult to come across. Real estate only has a handful of stocks that are in it outside of some ETFs and things like that. But it is going to be difficult to balance our portfolio. So let's go ahead and take a look at where we stand on this. And you can see that we're still at a +3 outlook. So we need to fill some slots, and it's going to be really difficult to fill some of these insight slots where we don't have much to go off of sector-wise in this area. Now, we still are positioned pretty good. We have plenty to choose from if we want to power up on this +3. But our weekly outlook, folks, is a +1. Our monthly outlook is a +3. So this might be something that if you're going to start to adhere to our outlook that we currently have, we're going to probably need to go further out. And yes, folks, stick to those outperforming strong sectors. So let's do a quick score on the markets. Here we are. I'll do it again for this. A 20-day moving average 50 slope. We are still in the exact same spot we have been for quite a while, which is basically that +3. So we got to go out and try to fill these slots. This is what I took a look at. Now, there's a few things that I did with this week's class. The first one is I wanted to be light because, hey, we've got a holiday in the middle of the week here. These markets have gapped up. They're toppy. They're volatile. I know I've had a lot of coaching sessions with traders that don't know what to do, and here's a good idea. Don't do anything. We do love our portfolios. We want to be exposed at some point, but adding 5 or 6 trades makes no sense. I got 3 to look at. Now, I want you guys to understand there are some really good things to look at for this -2 area. I went ahead with the industrials example here, but there were some in financials that would be great and some in energy that would be great as well. So here's the sectors that I'd be comfortable with outside of the choice I'm going to give you. Keep this in mind, okay? Now, I know that we already have some comm services, but if you're looking to get all the way up to that +3, fish where the fish bite, the consumer and the technology as well. I know we've got a couple of them already in the +2 categories. This becomes tough because if we get +2s and +3s in these same sectors, wow, now we're just kind of adding up the same problem. We get a correction, we're hurt. Why I have them highlighted is because these +2s might come off in the next week or so. If you need to jump and skip ahead to a +3, those are the places to be. What is difficult is finding that meat and potatoes, the -1 to the +1. Now things can change. So if you can't make a decision and you're not sure what to do, let a week go by. Let 2 weeks go by. Let's see if we can't come back to some sort of an area that we have a lot more choices. So there's your nugget of wisdom from me. Even if you didn't ask for it, you're welcome. So let's just jump into the possible trades. Like I say, I've got just a handful here. This is ATMU, possible trade here. It's going to be kind of a -2 outlook, right? I'm looking at the 28-27 bear put spread. Let's jump into the chart here. This had, I believe, $1.50 strike prices. if I remember. But hit this 28, go down a dollar here to what's that? 27's about right there. Not asking much on this. If you did notice, folks, yes, I am only going a week. The 21st is the expiration on this. If you want to go further out, please be my guest. If you want to, you might want to go a little bit deeper if you want to get a little bit more greedy. Here's a nice little consolidation area back here. Let me bring it forward. So you could be shooting somewhere down in this 26 area. A dollar strikes. It's not going to be too big of a move. Something that's just kind of going to bleed lower. You could also credit this. You don't have to do the debit spread. Next up is going to be our financials. This is American Express. I did this as kind of a 0 to 0.5 outlook. And okay, what I like about this is I like targeting butterflies. It's got a decent range here. I'm going the 28th. What I usually do with my butterflies, folks, is I like to take profits when they come in line with my median strike, and then I let the rest ride. So let's zoom in on the chart here. This is what I'm looking for. It's a 220, 230, 240 called butterfly spread. It's a 0 outlook, but it's got kind of a bullish lean to it because it's out of the money and it is using calls. So let's take a deeper look at this, and I'll show you what I'm talking about. Let me get my box out because I like to kind of draw when I'm targeting. So I'm back here. Let's see the 240. And I'm down to the 220. Okay, so this is the range I'm looking at, but you guys can see that my median is slightly higher than what's at. This is kind of what I'm shooting for. Now you guys can go a little higher up to the 50-day moving average would be a good one. I just saw a little bit of resistance back in this area, and based on how quick this could bounce. Now I have the 28th. I would not be if somebody wanted to make the argument of the 21st, I could get behind that. Understand we will have one day where the markets are closed, which is Wednesday. So I decided, hey, the 28th, might as well just take if it goes there. Also, if you have a lot more time on a targeted butterfly, then it gives you that time for it to get there, and you could take half that position off or a percentage of that position and let the rest just kind of go to fruition. And the last one I guess we'll take a look at, obviously, is going to be on the consumer side. Now, this is Ross. Retail seemed to do pretty good. I was looking at Walmart, by the way, folks, as well. Very similar pattern, just a little tighter. I liked Ross because it had kind of a landing zone. Now, diagonal spread on this would be a +1 outlook. This was our +1 trade. June 21st, remember, that's next week. And then July 5th. I like to be at least 2 weeks apart on my diagonals. Hey, that's just me. But you guys can go ahead and do any sort of combination that makes you happy. Where I focused on this was pretty obvious. Right back through here, you guys can see that it was nice and choppy around that 47. I chose the 148. Excuse me, 147. 148 is where I kind of wanted this to land because I figured it would kind of hit resistance there. It's already got this nice little climb. Now, understand, folks, if this just turns right around tomorrow and or next week and it starts to do this, that's great. That's why we bought July 5th. Let the 148 roll off. Maybe sell a 147 in July 5th, turn it into a vertical spread. Remember, this is a +1 trade, and so that's all we kind of want out of it. All right, well, that's going to do it for me. The broad market, mildly bullish. It's aggressively, happily bullish, but now that it's there, hey, all that the inflation data has got it very comfortable and calm for it to set yet another high on a couple of those indexes, right? The SPX and the NASDAQ, but it's still mild. Now what do we do? It's kind of looking around. A large few lead the way. I want you to remember that. NVIDIA can carry the markets for a day. That Apple announcement of the Chat GPT or GPT being in there, going to be part of their phones in the future, was enough to add billions of dollars into the stock market all at once. So it can be a little bit misleading. Be very specific and focused on sectors. Holiday on Wednesday, midweek holiday. Everything shuts off and then it starts back up. I'm not sure if we're going to get a full week. I'm not sure if people come back from that holiday for the rest of this week, but keep an eye on it. Good time, like I say, to sit back, do some more research, check your plan, focus on your sector strength and weaknesses always. And if you do trade, position sizing is always key. All right, guys, thanks for joining me, and we'll talk to you next time. Bye, everybody.